If you've been investing long enough, you'll notice something very interesting. The biggest changes in markets never happen amid noise. They happen in silence. Right now, while financial headlines are still arguing about how many times Bitcoin has died, there's one fact very few people are paying attention to. More than 60 to 70% of all Bitcoin worldwide has not moved for over a year. That's not because there are no buyers. It's not because of a lack of liquidity. It's because an increasing number of Bitcoin holders have a strategy. Bitcoin is quietly leaving the free market. It's being withdrawn from exchanges, moved into cold storage, long-term vaults, and, most importantly, being prepared to become collateral. In other words, the market isn't dead. It's being locked up. Over decades of working with investors in the United States, I've seen the same mistake repeated again and again. Selling growth assets too early. The culture of buy low, sell high sounds perfectly reasonable. It works for low-growth stocks and for stable markets. But Bitcoin is not a normal asset. Bitcoin has absolute scarcity. Only 21 million coins. No more. No less. Selling Bitcoin too early is like selling Manhattan real estate in 1920 just because you doubled your money. The wealthiest Americans didn't get rich because they were good sellers. They got rich because they held growth assets for a very long time. And in the US, there's another factor that makes selling especially expensive. Taxes. Selling Bitcoin is an immediate taxable event. Short-term gains are taxed as income. Long-term gains are taxed as capital gains. Borrowing against assets, on the other hand, is not. This isn't a loophole. It's how the financial system is designed. And the ultra-wealthy have been using it for decades. What's changing today is how Wall Street views Bitcoin. They no longer see it simply as a risk asset. They're repositioning Bitcoin as digital gold, global collateral, and a long-term store of purchasing power. Fidelity, BlackRock, BNY Mellon. They're not building infrastructure just for trading. They're building infrastructure for lending. When Wall Street changes how it sees an asset, the rules of the game change. And that's why more and more Bitcoin holders are realizing this. You may never need to sell your Bitcoin at all. Throughout my career, from Wall Street to personal financial advising for middle-class American families, I've always seen a very clear line between two groups of people. Not between the smart and the less smart, but between those who are forced to sell assets and those who never need to sell. Bitcoin is gradually drawing that line. As more and more Bitcoin is withdrawn from exchanges, it doesn't just signal conviction. It signals a shift in financial behavior. Bitcoin is no longer seen as something you buy and sell when the price goes up. It's being treated the same way Americans treat homes, land, and equity in private businesses. You don't sell your house every time you need cash. You borrow against its value. That is exactly how Bitcoin-backed loans work. Instead of selling Bitcoin and triggering a complex chain of taxes, you keep Bitcoin as collateral and unlock liquidity. The Bitcoin stays there. It continues to appreciate. Meanwhile, you have capital to live on, invest, or seize new opportunities. This isn't a new idea. It's the backbone of the U.S. financial system. The wealthy don't sell Amazon to buy a house. They don't sell Tesla to start a new company. They borrow. The biggest difference between the middle class and the wealthy isn't income. It's how they use assets. The middle class earns money, sells assets, pays taxes, and then starts over. The wealthy hold assets, borrow against them, and use borrowed capital to create more assets. Bitcoin, for the first time in history, brings this model to the retail investor. When Bitcoin is used as collateral, it leaves circulation. It becomes locked. And when millions of Bitcoin are locked up, the supply on the open market naturally shrinks. At the same time, demand is rising, not just from individuals, but from banks and financial institutions themselves. Banks don't love Bitcoin for philosophical reasons. They love Bitcoin for profit. To lend, they need high-quality collateral. Bitcoin meets every requirement. Scarce, liquid, global, and impossible to counterfeit. This creates a new reality. Banks begin competing directly with individual investors to own Bitcoin. And history shows that when institutions buy an asset, they don't sell it. They accumulate. They think in 10-, 20-, 30-year cycles. MicroStrategy is the clearest example. So are pension funds and university endowments in the U.S. Once Bitcoin becomes a permanent allocation, the idea of selling almost disappears. This leads to a new financial loop now taking shape. Borrow cheap USD. Buy more Bitcoin. Use Bitcoin as collateral. Borrow again. Exactly how the traditional financial system has operated for decades. With one key difference. This time, Bitcoin is the core of the system. And as this unfolds, a harsh reality becomes increasingly clear. There are only 21 million Bitcoin. Most have already been mined. More than 1 million are already in the hands of institutions. Most Americans will never own a full Bitcoin. In the not-too-distant future, even 0.1 Bitcoin will be seen as a status asset, like owning prime real estate. So for individual investors, the strategy is no longer constant trading. The strategy is to accumulate, hold with conviction, and use Bitcoin intelligently. Don't sell out of fear. Don't sell out of emotion. And when you need liquidity, borrow responsibly, not excessively. This is not the path to quick riches. It's the path to building a durable financial foundation. There's a question I often get from people who've lived through a few market cycles. They ask me, if this is true, why isn't everyone doing it? The answer is very simple. Because most people are still looking at Bitcoin with a trading mindset, not an asset mindset. In the traditional financial system, you're not taught how to hold assets. You're taught how to circulate cash, earn money, spend money, invest, sell, repeat. Bitcoin breaks that loop. When you use Bitcoin as collateral, you fundamentally change your relationship with money. You no longer ask, should I sell now? You start asking, how do I make my assets work for me? From a financial science perspective, this isn't vague at all. It's based on a very basic principle. Scarce assets, when locked up, increase in value over time. Bitcoin has an advantage no other asset has. A fixed, transparent supply that cannot be manipulated. When Bitcoin is pledged as collateral, it doesn't disappear, but it leaves the free market. It's no longer sitting on exchanges. It's no longer readily available for sale. And when that happens at scale, the market no longer behaves the way it used to. In the US, we've seen this in real estate for decades. When people stop selling homes and shift to refinancing, prices don't fall. They rise, because supply is locked. Bitcoin is entering the same phase. Meanwhile, the banking system is facing an unavoidable reality. Inflation erodes the value of cash. Traditional bonds are no longer as attractive as they once were. Banks need a new form of collateral. Clean, transparent, and global. Bitcoin checks every box. That's why large banks aren't asking whether Bitcoin will survive. They're asking, how do we own enough Bitcoin to run a lending system? And when banks enter the game, the rules change once again. Banks don't buy to flip. They buy to hold permanently. Just like they hold government bonds or gold. This creates a supply pressure unlike anything Bitcoin has ever seen. Not because of speculative mania, but because of system design. And that's when a new loop emerges. One that I believe will define the next decade. Cheap capital flows into Bitcoin. Bitcoin is pledged as collateral. Liquidity is created. That liquidity flows back into Bitcoin. You don't need to believe this emotionally. You just need to understand it logically. As more Bitcoin gets locked up, each remaining Bitcoin becomes more valuable functionally, not just in price. And in that context, the question is no longer, will Bitcoin go up? The right question becomes, how many people will still be allowed to own Bitcoin in this new system? Financial history teaches us a very clear lesson. Assets that become the foundation of a financial system never return to being mass-market assets. Gold went through this. Prime urban land went through this. And Bitcoin is on the same path. For individual investors, this is not a call to act recklessly. It's a call to awareness. You don't need to be rich to start. But you do need to start before the door closes. If you remember only one thing after this video, let it be this. The wealthiest people in the financial system are not the best sellers. They are the ones who never need to sell. Throughout history, every asset that has become the foundation of a financial system has followed the same path. First, it's dismissed as speculation. Then, it's accepted. And finally, It becomes an asset you borrow against, rather than sell. Gold followed that path. Real estate followed that path. And today, Bitcoin is entering its most important transition. When you understand that Bitcoin is not just something to trade, but a financial tool, the way you see the market changes. You stop asking, when should I take profit? And you start asking, how can this asset serve my life over the next 10 or 20 years? This is not a promise of quick wealth. It's a reminder that sustainable wealth has always required patience. Not everyone will own Bitcoin. And not everyone who owns Bitcoin will keep it. But those who understand the game, those who don't sell out of fear, don't sell because of noise, and know how to use assets intelligently, will be the ones who benefit most when the new system is fully built. In the future, selling Bitcoin to cover expenses may be viewed the same way as selling your house to buy groceries. It's not rational. It's not necessary. And it shows a failure to fully understand the value of what you hold. If you're here, if you've watched until this moment, that tells me one thing. You're not looking for short-term excitement. You're looking for clarity. And that clarity begins with understanding this. The future does not belong to those who sell early. It belongs to those who know how to hold, how to be patient, and how to use assets the right way. If this video helped you see Bitcoin from a different perspective, please hit subscribe to continue this journey with me, exploring deeper conversations about money, assets, and long-term financial thinking. Leave a comment below. Backhand index pointing right, do you see Bitcoin as something to sell, or something to hold and build the future with? And if you know someone who's investing but constantly feels uneasy, share this video with them. Sometimes, the most valuable thing isn't advice, but the right perspective at the right time. Thank you for your time. I'll see you in the next video.